Good morning, this is Sheldon here from the Currency Advisory Desk. Well, with the rupee touching intraday lows of around 56.3875 yesterday, everybody these days seems to be playing the guessing game for the rupee dollar pair. Will it hit 58 levels? Will it go down to more 60 levels, or probably cross the 60? That's just a wild guess on everybody's mind. Even the current firefighting measures which have been introduced by RBI to curb trading in currency derivatives, to rein in the volatility and cutting the amount of overseas income that companies can hold in their foreign currency accounts, the EEFC accounts that is. Even these measures do not seem to be working to stop the rupee's downfall against the dollar. However, we feel that the dollar will give back some of its gains. Even in fact this morning, as we saw on the opening, some of the gains were reversed. Basically this is due to the on the back of profit booking, and we expect it probably to go down to around 55 to 54.50 levels, from where once again it will continue its uptrend after falling. Now it has the thing to observe is that it has risen by more than 7% in the past few trades, one way move, upward move, and yes, we do expect a minor correction at this point of time. But overall the trend for the dollar is strong. We still have the fundamental problems which there is absolutely no redressal by the government. We'll get on to that a little bit later. Now moving to the dollar index, the US dollar index is trading at around 82.53 levels. Now the greenback is expected to strengthen further against the major currencies. Now partially because of its safe haven status, and also because of the gloomy situation that's there worldwide, including the Eurozone. We are seeing all bad numbers coming out from there. And some analysts are even predicting that it would probably cross the psychological 86 level mark, the dollar against the other pairs, that is. Now Europe also seems to be stuck with the same issues. It's like they're not moving forward with anything. It's like a tape that's just stuck and not moving ahead. There's the deadlock between Merkel and Hollande, the French president, and Greece. Well, will it stay, will it go? We've got a lot of action happening on that front, wherein all the European ministers are stating that Greece they would like Greece to stay on board. However, the views that are being expressed by analysts, by bankers, are contradicting to what the European ministers, the Eurozone ministers are stating. And the general sentiment that Greece will move out of Eurozone is increasing at present. And the ever increasing flood of negative numbers from the Eurozone, be it your manufacturing, be it your spending figures, everything that's coming up is just showing in the red. There's nothing that's coming up which is supporting the Eurozone. Now, with everybody on board predicting Greece's exit from Eurozone, Greece basically seems like a lost cause for the euro. We expect the euro and pound to be grounded to levels of around 1.25 for the euro and 1.56 respectively for the pound. We don't expect any much movement either ways. It seems to be that it is stagnated at this levels, and it will continue at these levels for at least till some major event takes place, or so we get major news from the Eurozone. Now in rupee terms also, we expect some strengthening of the rupee against the euro and pound, primarily due to profit booking in the dollar rupee pair, because we derive the prices of euro and pound from the dollar rupee pair, that is. Now the yen seems to be strengthening further against the dollar. It has already been seen at 79.81 levels. In rupee terms also, we expect the yen to strengthen further. However, if the dollar gains, this will play spoil sport for the yen's upward movement, that is. We may see some downfall if the dollar gains. Now we got recent news about certain measures taken by the government. We see that the oil companies have increased the prices of petrol by 7.5 rupees per liter to curb the dollar appreciation losses. However, this seems more like a desperate move to save the bottom lines of the companies, because they are just going on reporting loss after loss quarter on quarter, and we do not expect any of this particular measure to have a major effect on the upward trend of the dollar. Further, we also had statements yesterday from the central government, from the economic advisors, stating that they were trying to, you could say, consolidate the rupee, and I mean they were trying to say that rupee has also fallen, but look at look at the other currencies also. The Brazil's real also has fallen as compared to the dollar. This is more of a emotional kind of a thing what they are talking about, but in reality, we cannot compare our economy to Brazil's economy. Now see, Brazil's economy is completely different. They are more of a export oriented economy. Their major exports are the mining exports, what plays a major share in the GDP of Brazil. Compared to that, India is more of an import oriented economy. We have our oil imports, we have gold imports, which are causing the major trade deficit that we are looking at. So comparing on those terms is a bit dicey. Also, if we see, what has happened is that worldwide commodity prices have fallen down by more than 10% in the past few months. And now this is a huge fall for commodity prices, which is what is hitting the Brazilian economy at present. And basis this, yes, it is justified, it is logical that the Brazil's real, the currency of Brazil, would fall, or the fall that is there is justified. However, for us there is no such core justification what we can give why the rupee has fallen. So you could say that a head-on comparison of both the markets is a little bit far-fetched. It seems to be a little bit far-fetched. Anyway, moving on to the technical levels for today. Now the trend for the dollar in today's terms seems to be a bit bearish. We see support for the dollar at around 55.55 levels, and a resistance we see on the upward move at around 56.51 levels. Now for the euro also we are a bit bearish, and for the yen. For the euro we see a support at around 69.50 levels on the downside, and resistance is seen at around 70.90 levels on the upside. Similarly for the yen we see a support at around 69.72 levels on the downside, and a resistance is seen at around 70.95 levels on the upside. Moving to the pound, well, the pound intraday it is bearish, we as expected for the euro also. The pound, the support is seen at around 86.25 levels on the downside, and a resistance on the upside is seen at 88.44 levels. Well, that's a wrap for today. Thank you.